Oh man, we just got some shock macroeconomic data which throws a complete spanner in the works here for the crypto markets. You can see Bitcoin down 1.5% here today, altcoins also bleeding, and also the traditional markets really suffering in a bit of a bloodbath. Nasdaq down 1.7%, S&P down 1.4%, and the fact of the matter is we got some bad macroeconomic data fresh off the press just now. You can see GDP growth slowed to 1.6%, guys. This is versus the 2.4% estimate. But as if that wasn't bad enough, you got the worst of both worlds. Not only did you get the GDP, i.e. the economy was slowing down, we also got that personal consumption, which is PCE inflation, came in hot. The quarter-over-quarter figure came in at 3.5 annualized, its biggest gain in a year, okay? Consumer spending also increased 2.5%. It was down from 3.3, but still quite hot, right? So what this is now telling us is that inflation is still hot. The economy is now slowing down. And what do those two things mean, guys? Stagflation. And if this narrative of stagflation continues, in other words, if we keep through other means of data seeing that the economy is slowing down and yet inflation is still high, this is the definition of stagflation, the worst thing you can see. If inflation is hot but the economy is growing, it's okay, right? It's okay to overheat a little bit when the economy is growing. If economy is shrinking and yet inflation is still going up, this is not good. This is stagflation. This is going to be a problem. So what this now means in quick talk is Jerome Powell, yes, will have to come in and start becoming a little bit hawkish. And we are not far away from our next FOMC meeting. So this is kind of bad timing, right? May the 1st, just over 6 days or so from now, Jerome Powell delivers his next FOMC meeting. And look, the market wasn't expecting a rate cut. But what's going to be concerning now, which the market is having to price in, is that is he now going to have to come out hawkish? Is he going to come and with his words be really strict to tighten the market again? Now, on top of that, you have to remember that coming into this year, markets had priced in at least 3 rate cuts. So they expected the rate cutting cycle to start this year, and already they've had to delay it numerous number of months. If we check the latest Fed Watch tool, you will have to go to the fourth from now FOMC meeting, which is in September, to see where the market prices in a majority for getting our rate cut. In other words, the market expects that our first rate cut is going to happen in September. And that's already been pushed back month after month after month. And the question now is the market going to have to completely unwind all 3 rate cuts? Because currently they're expecting one in September, one in November, and then one in December, right? But you're starting to see that getting priced out. Markets will stop doing that, right? So look, as you can see here, 44% of the market expect no more rate cuts in November. And then if you go into December, you can see majority of the market also thinks we're there. So already the market is saying, oh, look, we're going to get rate cut and we're just going to sit at 5 to 5.25, which is just one rate cut all of this year, when the market was actually pricing in 3 before that. Now, what that means in layman's talk is that we're going to have to price in some pain. Hold up. Do you want to learn how to trade? Then you need to jump into our Telegram community. Link is in the description. In our Telegram community, I share my altcoins. I share how I do my trade setups, how I do my stop losses and take profit, so you could learn to become a profitable trader. Check it out. Link is in the description, right? Because the markets were expecting 3 and we may no longer get 3. That is a little bit of a worry here for this market. Now, when we jump back into the Bitcoin chart, what is it we see? I mean, first and foremost, I shared this pattern with you guys. I said, guys, we're in a bull flag, but we're losing this battle here. And sure as hell, we did lose that battle, right? We came down and we kind of got rejected here from the 67,000 region on Bitcoin. Now, there's no need to panic just yet. Yes, it's not good that we lost this battle. It means we were unable to kind of work our way to the top of the trend line, but there's no need to panic, because the only time you want to panic is if you now start coming all the way here to the bottom. If you spend too much time along the bottom here, there's a chance you break down, and that's when you start looking for support, coming down to your support at around 50,000, right? Until then, there's still some chances. As you can see by my drawing, if I zoom in here onto the hourly chart, I'm just zooming into here to the hourly chart, you will see that where we're at right now, there's a little bit of demand area here. And so if Bitcoin can hold some support in this area and bounce, that could be quite positive. And the other reason I think this is quite important is we've got a bit of divergence. Look here, the price is going down. Look at the RSI. RSI is going up. Okay, so we've got a little bit of price RSI divergence, which is a bullish signal that oftentimes Bitcoin's ready to go sideways or maybe even up. Okay, so this could be quite an interesting move on Bitcoin. So I wouldn't say all hope is lost just yet. We could create a higher low. We could do exactly this, create a higher low and start working our way back up to the top of this bull flag pattern. And we know that this bull flag pattern is very, very important. In fact, breaking out this pattern not only triggers the start of this bull run, but I mean, you can take a technical price target from here, take that measured move, and you can see that this then takes you up towards a crazy price target of $95,000. And again, if you guys want to trade these moves, if you want to trade this breakout here on Bitcoin, then you can do so using the links in the description to Bybit, to Mexi, to BitGet. Those are the exchanges I'm currently using. Check out the links in the description. They do support the channel, but they give you some amazing bonuses for taking some of these trades as well. So not all hope is lost here on Bitcoin just yet. If we lose this demand area, then I start getting worried. I'm like, okay, are we going to want to spend some time here? And then if we break it, I need to start getting ready for 50,000, right? I need to be ready for 51 because I don't want to get caught off guard if this wants to come down to 51, not having cash on the sidelines to buy the dip. So that's my plan right now in the market. Now, the other thing which is interesting for altcoins is that the dominance continues to show weakness. I shared this with you guys a couple of days ago when I spoke about, are we starting an altcoin season? You can see dominance is starting to move to the downside. I mean, if you just take a look at that, I mean, we were as high here as 50%, 57%, and now you came as low as 54%. So dominance is definitely taking a pullback, which is good for altcoins relatively to Bitcoin. So these are some of the important things you need to be watching out for in the market. The other thing I want to share with you guys is the trusted EMA ribbon, right? What did I warn of yesterday was that we were risking losing our EMA ribbon. And you saw we've done exactly that. So take a look at this, guys. You can see now that yesterday's candlestick made us break all the way into our EMA ribbon. We didn't quite get the daily close below it, but today's candle is all but confirming that. So if this candle continues in this pattern, this is a little bit worrying for Bitcoin, right? This is not a good setup. So it's important that if we want to stay bullish on Bitcoin, we can rotate where we are, get a higher low, and start working our way back into this direction. Very, very important. Otherwise, we risk curling over. So guys, economy is not showing good data right now, but not all hope is lost. We have seen situations where GDP figures have been revised. If you look at the Q1 figure from last year, it came in at 1.1% and the market was really upset. But then when they revised it, remember you get free revisions of the GDP figure, it came in at 2.2. So then it got a whole 1.1% uplift in the revision. So I wouldn't be, taking that one data point and panicking. What I'm saying is we need to look at the trend. If we keep getting economic data, which is showing that the economy is slowing down, right? Like we're seeing all those stats showing slowing down, and the inflation figures are still high, showing hot numbers. That equals stagflation. Okay, so we need to be able to break that pattern. So we'll be monitoring that macroeconomic data as and when it comes out. But as it stands, with the FOMC meeting next week, Jerome Powell could be looking to come out in that meeting next week to put the market back in its place, to say, hang on, chill out. You need to price in some pain, because the reality is I can't be rate cutting in this type of environment. The fact that I told you we were going to probably do 3, well, we might need to backtrack that, because this market is not allowing me to do free rate cuts right now. This is one of the reasons we're seeing a lot of volatility in the market. If you want to trade with me and our community, ijazcrypto.com/TG. It's the very first link in the description. Come join us. You can see exactly how I've generated over 300% spot long only returns through trading altcoins, and I share every single trade with you. I show you in full transparency. I'm not like these other YouTubers who pretend they're a trader and they don't actually trade. Where are your trades? I show you every single one of my trades, nothing to hide. Jump into our Telegram group, it's free. You can see every single trade I take. Thanks for watching, guys, and I'll see you in the next one.